Good afternoon, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is the 10th of Thursday, one day before the WASDE report is released here. Corn trading down 5 cents, soybeans down 10 1/4, and wheat Chicago trading down 2 3/4 cents. Of course, on a Thursday, we do get export sales here. Logan, what did the trade see here this morning? Did it surprise us at all?
You know, not really. It was relatively in line with trade expectations. A few outliers where we saw some light sales of new crop wheat. We saw relatively good old crop sales of soybeans, but a little bit light on the soy meal, so those two factors kind of canceled each other out. As I said, a relatively neutral export sales report, with the exception, I think, of what we saw on new crop corn sales. Take a look at this chart here. The blue line details accumulated corn sales to date. The red line is the settlement price of the December 14 corn contract, and you can see here, obviously this market's moved quite a bit lower since early May. The good thing to see, though, is that we're seeing a sizable increase in the new crop corn sales. As you can see from the blue line, it's ramped up quite a bit, and this is going to be an important factor to continue here moving forward if this corn market's going to find a bottom. In today's trade, no sign of a bottom was found. We'll have to see what the USDA says tomorrow, but long term here, we are seeing some good indications of export sales on the new crop corn.
Yeah, absolutely. And let's just take a look here at what the expectations are for this WASDE report on Friday. For corn, ending stocks here about 1.774 billion bushels. When you look at soybeans, 418 million bushels. So those are both the carryout numbers. Let's just focus a little bit on soybeans simply because of the acreage numbers and how big of a surprise that really was. One thing to keep in mind, you know, we have a good indication of what we're going to see in supply simply because we saw the number of harvested acres. That's about 3.6 million acres higher than what we saw last year. Right. You know, we have a good indication of yield. We've had you know, highest good to excellent ratings here in 20 years. But the question is really about supply or about demand. How is demand going to react to that? And more specifically, how is the USDA going to react to that? Because they're most likely not going to factor in their full anticipation of demand, because we need to see indications that demand is going to react quickly to these lower prices. Right. Now, one thing to keep in mind, this 418 million bushel carryout, that implies about a 76 million bushel increase to demand year over year. Yep. So that's about a 4% increase. In years where we saw a 10% increase in supply, and we're seeing a 12% this year, right, but in years that are similar to this, in 2006, 2007, and 2009, 2010, when we saw a 10% increase in supply, we saw between a 9% and 11% increase in demand. And really what we're seeing here, based on the average analyst guess, is factoring in only a 4% increase in demand. What this all means is that I think there's room for a little bit of a surprise here in a bullish capacity. If we're only expecting, you know, 418 million bushel carryout, we get slightly less than that because the USDA factors in higher demand. I think that could be a little bit of a bullish factor here. I think that could provide a snapback simply because we had such sharp directional selling following the June 30th report. We haven't been able to come up for air. This may provide a little bit of a snapback potentially.
Yeah, absolutely. Well, it could represent a good selling opportunity here for new crop beans, especially for producers that find themselves a little bit undersold on the new crop in light of a market that's traded lower with such veracity here over the last month and a half. Today, though, we kind of wanted to back out and take a little bit more of a historical perspective on what we're seeing right now in terms of prices to hopefully give us some direction as you're looking toward new crop prices in October, November timeframe. As you can see here from this chart, we're looking at back to 1975 of the new crop corn and the new crop soybean contracts. The green line here is that November soybean contract. The yellow line is the December corn contract. And you can see here it's been an exceptionally painful month here for corn and soybeans, but in a historical context, it's a relatively small move, especially when looking at soybeans here. If you take a look at the analog years that Cody discussed there, 2005-06, 2009-10, you can see from this chart we'd be looking at relatively $9 soybean prices. Corn, however, is getting close to kind of that bottom side range where we would expect to find some support. So I think the big takeaway here, in light of what Cody's been talking about on the demand side, in light of historical prices in marketing years similar to what we're having right now, is that there is still significant downside risk in the soybean market. If you're not comfortable fully selling soybean futures or making cash sales, it could be a good opportunity to get a put. and cover yourself in the event that we do get a further move to the downside. Considering the ending stock expectations, that is a real possibility when looking at analog years and years similar to the current marketing situation. So with that in mind, if you have questions about that, feel free to call our office, 877-472-4607. Cody, it sounds like we're going to be having a little bit of a cold front moving in here starting next week.
Yeah, absolutely. And when you look at this, I mean, pollination, critical growing time period when you have, it really has a lot of impact on yield. And, you know, we're not going to get the kind of heat stress that we've had in years past. And so I think that's very positive here. Of course, you know, you may be a little bit concerned about growing degree days. You know, this has been a rainy and a little bit, you know, cooler growing season. And that does leave us open to potentially some frost threats down the line. But that's not something that we want to start trading right yet. I think the big takeaway here is that, you know, conditions continue to be good. Pollination is not going to be overly threatened here. And I think that that's overall just very bearish again here for the grains.
Absolutely. Well, tomorrow we will be getting the USDA report out at 11 o'clock Central Time. We'll be tweeting about that report as it comes out live on Twitter. @GrainTV is where you can find us over there. Additionally, we'll be sending out some comments to Grain Hedge clients 15 to 20 minutes after that report once we get a chance to digest the numbers. If you want to be added to our email list or you're interested at seeing the services that Grain Hedge clients receive here, there's a lot of them just outside of the mobile trading and the $7 commissions per side trade. So if you're interested in taking a look, give us a call here at the office, 877-472-4607, or visit us online at grainhedge.com. Thanks for joining us here on a Thursday on Grain TV. We'll see you tomorrow for the July USDA report.